some numbers this morning. President Donald Trump signed more day one executive orders than the last 10 presidents combined. Now, since signing, U.S. equity markets are higher and the S&P 500 reached its first all-time high of 2025 just before we closed out Trump's first week in office. And the tech-heavy NASDAQ 100 and small caps also pushed higher. But there's always increased uncertainty under any new administration. While uncertainty is still evaluated, we are joined by financial expert Neil Brown, who can help break down these numbers. And of course, the big question for us is, should we be investing now, and how should we investing wisely? Neil, thank you so much for stopping by.
Good morning, thank you.
Yeah, let's go ahead and kind of break this down too. I love this overall message that you said, it's not about like kind of the time in the market. That's what matters, not the actual president's political party.
Absolutely. When you look at the markets in general,
right,
just staying invested is probably your better choice than worrying about the politics. If you go through the politics, a lot of people missed out money during Democratic runs or Republican runs if they were anti that particular party.
So when we kind of break that down with like the stocks and numbers too, what are we kind of seeing from the last presidency in the past couple of years, and what are we seeing now?
If you look at historical numbers, under a Democratic president, it's averaged about 12%. Under Republican presidents, averaged about 7%. But if you go with Republican Congress and the Republican president, it's averaged about 12%. So historically, since the Reagan days, it's been about 11% on average, depending upon which president, other than President second Bush, because he had some bad economic areas.
Okay, so what should we be doing? How about with like the S&P? I mean, that's gone up really 80% since what, 1926? So basically, how should we be utilizing our money?
I think you should strip politics out of it, strip your emotions out of it, think about the economic environment, think about interest rates, think about what's going on in valuations from the stock market versus looking at it from a presidential standpoint.
So let's talk about best investing strategies kind of right now.
I think you look at what you can do in a portfolio from your risk tolerance. So you're going to try to mix together stocks and bonds, cash, real estate in some type of portfolio that you can live with on the way down, because the only way to make money is to take the downs and be in there when it's on the ups as well.
Should we be taking those risks though?
I think absolutely. If you've got long-term money, you should be doing that. If you've got short-term money like a wedding or some type of college graduation coming up, that money should probably be allocated to cash.
Okay, so that's kind of how we want to really be handling that. And so obviously it's different for every single person, right?
Absolutely it is, and you have to look at your own circumstances.
And really the main cause and the big thing that we're hearing too, I love that, taking emotions out of it as well.
It's very difficult to do, but that's the only way to do it in the long run.
Biggest takeaways right now, Neil? I mean, I know there's a lot of questions. Of course, with the first 100 days still happening with the Trump administration, biggest takeaways with all this?
I think to not think about the politics and to think about the economy.
Okay, there you go. Forget the politics, all about the money, and kind of really focusing on that and tailoring it to your own self kind of.
Absolutely.
There. All righty, Neil, thank you so much for giving us all this information, because there's a lot of questions when it regards to moving our money and when we should be doing it, so we appreciate you.
Thank you very much.
All righty, we're going to be putting this all on our website, WLTX.com, so you can always refer back to this.